everybody, welcome to the Trading Market Technicals morning call video for Friday, January 17th. Just a quick admin note, just in case the markets will be closed. Martin Luther King's birthday on Monday, so the markets will return on Tuesday. Just wanted to give everybody a quick heads up. No morning call video, obviously, for Monday, but we will have it first thing in the morning on Tuesday for you guys. Quick rundown in the markets. Dow took it on the chin a little bit, down 64, but Nasdaq was held up relatively well, up $3.80. S&P really flat, $2.49, and the Russell up $1.78. So the markets, aside from the Dow Jones, have been really quiet the last couple of days. We had that 2 days of a big move, the one down day. And again, most of the big moves that we've seen, a lot of the stocks haven't really been moving. But we did get some earnings announcements from the banks, and that kind of put a little bit of a cap on the markets yesterday from Goldman Sachs and Citibank. If we're looking for a trade, if you're looking for a longer-term swing trade, I would be buying or nibbling into these dips from Goldman Sachs, Citibank, J.P. Morgan. J.P. Morgan needs a little bit of more of a pullback, but we'll get into that in the chart segment. But I do like the banks. Home builders, I like the home builders here. We talked about that as well. Any weakness should be bought in the home builders if you're looking to establish a longer-term swing trade. Okay. Now, yesterday was something interesting. We had the 10-year start to rise yesterday, and kind of put a pop into the XLU, which was the interest-sensitive sectors such as the REITs, the utilities, and of course the home builders. So they actually had a decent turnaround late yesterday afternoon. So that's something that sparking an interest to me as well. So what I want to do is let's go into a couple of things that I want to show you. Is the VIX one. And again, the VIX has been really relatively quiet, as you can see. We're at the low end of the range. The thing that worries me here with the market itself at these lofty levels that we are at here, and this could be basically a diving board where it bounces up and rallies a little bit. Now, again, I think that any rallies in the VIX should be sold into. The markets are, and again, we could have a big correction where you don't realize that could be the time. But for a relatively managed trade, I would be looking to sell any rips on the VIX. But right now we're very quiet, very subdued, low volatility. Markets are not worried about any type of sell-off. We're actually up about 2.5 handles now. And remember, this is options expiration day today. Generally have a bullish bias for the day as well as we had for the week. So just got to keep that in the back of your mind. I would be continually looking to buy pullbacks. Anything that's working for you is actually should be on the long side. Really tough to be short here, this market. Okay, now I want to go into the commodity segment here, and we'll show you the U.S. dollar. The dollar didn't do anything yesterday. As you can see, we're still holding into this range, but it didn't do anything bad and or good, so it's just kind of sitting here now, which tells me that this could break either way. Obviously, we don't know because we've just been basing here pretty much mostly for the last 3 months. If the dollar can start to sell off a little bit and get a little bit of weakness, then I think the commodity sector will have a nice little run. Generally speaking, the commodity sector, precious metals and even uranium, which is starting to look really good, and I'll show you that in a moment, starting to pick up a little steam where we can get a little bit of movement to the upside from January, February into March. So that's something that I like. And again, as I pointed out, I do like the silver trade a lot as well. But again, when you're a little early, you gotta ride through a little bit of the bumps until you get the major breakout here. But I do like the dollar. Watching the dollar, see which way this thing is going to go. Now remember, any movement, big movement of the dollar is going to affect the currency markets as well. All right, so now why am I talking about the dollar? Well, I want to talk about China again. This is the only canary in the coal mine for commodities. Now, if China starts to really sell off here, and as you can see now, we're hovering below the 200-day moving average. Now, when we were below it, right, we couldn't break it. We sold off again, and then we gapped above it, and then we held pretty much the last quarter of the 2013. And we got close. We hit a couple times. Now, this is totally a different dynamic when where it was. Now we're lower. So now that does not mean we can't jump back up again and hold and then move higher again. So this is where what I'm watching here, and it absolutely looks like a bear flag here. As you can see, the flagpole coming in and the flag. If China starts to sell off, I think it will probably damper the silver gold trade for a little bit. Now, again, if that happens and the dollar sells off, then it'll probably be risk on for the dollar. Excuse me, for the silver and gold trade, and people will be buying silver and gold as well as other precious metals. But so this is a 50-50 shot here. Now, if you look at the EEM, the emerging markets, same thing. You know, we had this descending triangle we broke. We're back testing it, which is normal. But we have the 200-day moving average. We have the 50, and of course, we're at the 20 here. So this could go either way. Emerging markets, to our markets, it's not healthy that that emerging markets are starting to break down here. It could be an isolated incident, but generally when you have emerging markets breaking down, China breaking down, that's not a good sign of what's to come. Now, this could take months to pan out, and then we see eventually we see weakness in the minis. So this is not a day trade information, but it's something to definitely keep in the back of your mind, especially if you're looking to trade some of the commodities. Okay, so just, keep that in mind. Now, we have gold. Here's the gold. As you can see here, gold's holding up relatively well, sitting on the 50. Had a couple of doji candles, and we're relatively flat right now. We're up about 90 cents in the pre-market. Silver's up a penny. So this is ready to ignite one way or the other. I think we're going to see an upside push before we see a downside push. So that's why I do like the silver and gold trade. Palladium, as you can see here, if palladium's holding up well, then you're going to have continued strength in the precious metal sector here. Okay, now if palladium starts to break down, that's a whole different story, and that could put pressure on the metal. So we need to keep an eye on palladium too as well. All right, so now let's get to the indexes. E-mini S&P, we're up about 2.5 handles right now, relatively quiet. We do have some housing numbers that are coming out today. Building permits 830. Okay, I think we have some consumer confidence numbers coming out as well, so definitely check the calendar. Definitely check your earnings calendar too for what you're holding. You don't want to come in and it's really basically a 50-50 crapshoot here if you're holding. You don't know how it's going to report. So anyway, we're sitting here at the upper end of the range, which is bullish, which tells me that I think we're going to challenge the highs, and we're not that far away. We're literally less than 9 points of the highs. My target is 1857 if I recall, and I will show that to you in the hourly chart here. Okay, as you can see, we've been basing. So this is it's funny because we had the down day on Monday, and we actually kind of closed up on Tuesday here, and then we jumped up, and then we just kind of flatlined most of the day with a slight push up, and then here's that bull flag that I showed you yesterday, and we didn't do anything. We just literally we've been going sideways for the last 10 hours of trade. So we haven't gone anywhere, and this is the cue that you should be taking off of the indexes to say, hey, I'm not going to trade until the markets start to move again, because if the S&P, which I take all of my decisions off of the S&P, if the S&P breaks out higher, then your longs are going to do well and your shorts are not going to do too well, and vice versa if it breaks down. So we're at these lofty extensions, and I could see the nervousness of the market participants, because any couple of ticks lower, stocks, some of the, now again, the higher names, just stocks that are, $30, $40, $50, $60 that relatively have average true ranges of, $1 or more, start to tick really following what the S&P does and starts to tick lower or higher. So be very careful, unless you're doing option positions, spreads and stuff like that, that's fine. But if you're, totally directional and you're long or short the market, or a particular stock that follows the S&P, which they usually do, you want to use caution here. You don't want to be loading up too much directional bias here, because of the fact that this looks like it wants to take this 1857. That's my target right here, 1857. And I think it should probably get there, but it doesn't matter what I think, right? So let's just use caution here, and let's not be reckless in our trade. Now, we do have a bullish bias because it is options expiration, and I do think that markets, usually the price action gets skewed either way, long and or short. And then usually what happens come Monday, markets usually kind of revert back to what was going on. So I do like the minis at least one more push. Now, if we can get a push higher today and then gap up on Tuesday, because Monday we're closed, and then start to fade again in the afternoon. That is what I'm looking for some sort of a local top in place where we can start selling rallies and at least correct to whatever 1740 I think it is. I think we have 1740 down here, and then of course we would reevaluate it. But it's interesting. So let's just keep that in mind. Keep that in the back of your head while you're trading. All right. So now we'll get into the spiders. As you can see, holding at the upper end of the range, we're above the 20-day moving average. Looks fine to me for at least a test or to make a new high again in the spiders. Diamonds here kind of sluggish the last year. As you can see here, we really took it on the chin, the diamonds, and then actually ran back up again, and we're just kind of holding at the upper end of this range from the 2012 lows. So still looking okay. I think it's the weaker of the five. Again, it is actually the lagger of the five indices that we follow. Definitely not a leader. So long as the other leaders start to hold up, here's the transports holding up really, really well here. As you can see, we have a nice little doji sitting at the upper end of the range. I think this thing starts to break out again. Now, if oil starts to break down as well, it's gonna help this sector move higher. Okay. Russell, again, good gauge of risk. As you can see, Bollinger Bands also tightening. 20-day moving average above there, holding at the upper end of the range. I think this is ready to explode at least one more time to the upside, and then of course we would reevaluate it. But again, looking constructive here. We just got a big push in the E-mini S&P up 3.5. We had the UK had some strong retail sales come out. So, and another thing, speaking of retail sales, the consumer discretionary has been dismal the last week or so. So I don't know if that's a precursor of what's to come, but we need to see consumer discretionary start to really pick up. A lot of the retailers have really taken to the woodshed here, and that's something that I am taking notice of, and that's going to need to really roll back to the upside. So I'm looking to see the retailers here. I'm watching them closely. Okay, take a look at GLD. And again, same thing we just talked about gold. Just want to show you a picture in the GLD chart. Again, back up to this area, 122, 123. And if it does fail, I'm going to try to take a short here. But right now, I think GLD goes higher going into that seasonal strength of January and February. Now, the XLE, here's something interesting. We've been looking at this, right? We have this big bearish rising wedge. And again, only bearish if we break down. And I hate to repeat myself, but we have new people coming in and checking out the video. And we're holding here. Now, this is a good spot for a bounce. If we start to break down here, then you have to look out for your oil services. Right now, what's looking good is the Schlumberger, which reports today, so use caution when you trade. It's going to be before the opening, so you're going to have no problem with that. But Halliburton looks great. Schlumberger looks great. I do like that. But it's a mixed bag. It's a mixed bag right now. So, but they are actually coming to some seasonal strength between now and April. So I'm looking at this sector for maybe to pick up a couple of longs. And let's take a look at the USO. Again, oil. I'd like to see a nice flush here into this area, back into this area here, because again, if it loses the $32, then I think you're going to see a big flush back down to this $30, and that's where I would be really interested in picking up some long trades here. As you can see, we're way oversold, and I like to see stochastics when it breaks it back above 20. That would give me a good buy signal, as well as a turn up in a MACD, okay, and some volume. So this is what I'm watching for a long trade. No trade in crude oil at the moment. Now, the home builders, again, I like the home builders, and if you're not in the home builders nibbling in here long would be a great long to establish for 2014 swing trade. Here's the XHB, again, doing absolutely nothing wrong, low volume here, so I do like the trade. I like XHB, and as you can see, Lennar, low volume pullback, nice, I like it, holding above the 20-day moving average, holding above the 200 to 50. 50 looks like it's going to cross any minute. So another couple of days of consolidation, and that 50-day will cross up higher where it should be above the 200. Okay, so again, home builders looking pretty good. Pulte Homes, I do like this here. Even back into the low 1875, 1890. 50-day already crossed the 200, so this is actually really good. We got this little bit of consolidation pullback. Look at the volume, nice and light. This is a perfect setup for a long trade. And we have a KBH, which I like here. As you can see, KBH doing absolutely nothing, holding in here steady. Now, again, you could say, yes, this is the weakest of the few that I showed you, but it hasn't done anything yet. KBH had some decent news out, so I think KBH is relative. If KBH could take out this consolidation at 1850, 1865, I think you're going to have a decent run up, easily up to $22.5, $23 in KBH. All right, take a look at the ETF, the banks and financials. Again, I do like this for 2014. As you can see, Citibank really came in. That's basically on an earnings miss, but now it held this area here. So drop it down into a 15-minute chart, a 5 or a 30-minute, depending on your trading style. But take a look for a long entry here. Your stop is easy to manage. You can put it down below here, or if you really want to make it work, below the 50-day moving average, and start to nibble on any pullbacks here. But I do like Citibank here. I like it. This is a great opportunity due on that earnings miss. Okay, JP Morgan, as you can see, JP Morgan actually pulled back on its earning and then exploded higher again. So any weakness in JP Morgan, I would be buying. I'd love to see it come to the 50-day moving average, and I like to buy the JP Morgan, but I don't think that's going to happen at the moment. Really strong. And Goldman back to the 50. It reported yesterday as well. Their earnings missed, but Goldman here on any weakness should be bought as well. And we take a look at Apple. Lastly, Apple. Okay? All right, guys. Enjoy the long weekend. Get away from the screens and spend some time with family and friends. It's good. It's healthy. Clears the brain. And you can be really ready to go for Tuesday morning's trade. Again, I will have a full update Tuesday morning getting ready for next week. Have a great day. Have a great weekend. And we will see you on Tuesday.